Now, by the end of this video, you guys are going to learn how I made $164, and I've been doing that every single day, a minimum of $164 from trading stocks. So I hope you guys all enjoy this. If you do, smash that like button, subscribe, and if you guys want to learn more about trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat. We teach you how to build a strategy. We teach you setups, strategies, approaches, entries, exits, risk management systems. So check it out down below, and you guys can get 50% off by using code FIRST50. So I'll see you guys in there. Make sure you guys check it out. Only like 5 spots left for that code, and it ends at the end of the week. So make sure you guys check it out before the sale ends. So I hope you guys all enjoyed this. If you do, like, subscribe, and let's jump into this. Now, if you guys are watching this video and you're just getting started, I'm glad, because this is probably the best trading YouTube video you guys can come across, because I've been doing this for over the past 7 years. So if you're just starting trading, here's what I would recommend doing. Don't trade. Don't. The last thing I want you to do is watch this video and go, that is the easiest thing in the world. I can do this in my sleep, Carter. You're saying people lose money from trading? This is simple. Trading is just like anything. It takes years. Yes, years of practice, of hard work, of education in order to be successful. There's traders out there that have turned $100 into $1,000. Yes, there is. But I focus on small base hits. I'm a trader where I will easily take profit at 1, 2, 3%. With this trade, we made near and around $164, and it wasn't even, 1%. So we went a little heavier because of the ETF we traded, and I'll explain to you why we did that. So, let's just jump into this. But if you're starting out, take a step back, focus on education, start paper trading, start small, and then you'll learn. So, all right, let's look at the stock here. This is ticker symbol SPY. For those of you that don't know what SPY is, SPY is also known as the S&P 500. So, in simple terms, this just represents the top 500 companies in the United States. So, you guys can see that pre-market, we saw this huge move where the stock or ETF went from 540 all the way up to 560. Now, for an ETF of this size and of this magnitude, making 2.5% after hours is huge. That's a huge amount of volume. Now, when it comes with trading, one of the most important things you guys can do is to be prepared. I'm not sure if you guys can hear the rain outside my window, but being prepared is super important. So what I did here is I saw this stock here form this really hard trend line. You guys can see where it hits this spot, hits it, we have sell off, hits it, we have sell off, right? But it also was getting a decent amount of support here on that 90-day moving average line, right? So it would hit it, we had buying pressure. Now, ideally, there was a lot of great opportunity actually this morning. Pretty much the first trade I was going to take here was going to be right here on that 90-day moving average line, but it was almost a little too fast because this trade, you have support, you have resistance. So you're hoping for a breakout. You're not really getting in on a breakout. You're more hoping for a breakout. So now we had this huge pop, okay? This, as you guys can see, is what we classify as a resistance breakout. This will incentivize more traders, more hedge funds, more analysts to enter the trade. Now looking here, right, we had a decent little, we had some volume in there just to make sure there was buyers in there. Now, as we continue to go through this, I also had the MACD, which is also a super important indicator here. Now, the MACD here had that signal line, which is that orange line, break up through that blue line, which is the MACD line. The last time it did that was back in here, right? And what happened? Huge buying pressure. So now as we're watching this and we have this beautiful breakout here, I go, okay, this is our point. This is our entry point near and around the 561 area. So we entered the trade. Now my thought process was this: we could enter the trade and keep our stop loss relatively tight below the support here at about 558. As the stock rallied up, right, we can see it continue to go up and up and up. And then we had that first initial pullback. Okay. And this is actually where we kind of started to get out of the position. We tried to scale out. And the main reason why we got out right in this range here is because we had that first red candlestick fall below the close of the previous candle. So right in here was that entry point near around 563. So now our move was, like I said, a little less than 1%. We sold off. It dipped down on that MACD indicator, which is the last confirmation. Pretty much this actually would have been a decent short trade. So now here the stock is continuing to sell off, right? Continuing to sell off, boom, boom, boom. Also, one of the things we noticed with this stock is look at the support here. People love to always say, Carter, I can never find support. Well, look at here, buying pressure, hits it, buying pressure, hits it, buying pressure. So now here it classified a great move of support here, and we didn't bite the bullet and trade this. It popped up above all these moving average lines, did very, very well. And Intel, before the market closed, it started selling off here today. So what a great setup, right? So let's review. Stock gapped up and got good buying pressure after hours that previous day. It formed that general downward trend line, okay? Which is fine. Trends are fine because we get in on that breakout. The first candle to pop up and form above it was our entry point, keeping stops relatively tight. For a push, hopefully, I was hoping for a push up to like 565 to 566. Now, it dipped down on that first candle to close under the previous candle. Exit, nice little move, capturing profit. Still formed a really nice heavy support line in this range, as you guys can see. So there's a lot of great setups with this. And for those of you that always ask, they go, Carter, how do you find these plays? Check out our school. Check out our school. Right now, we've been obsessed with day trading, stocks, ETFs. Most of the time, honestly, we're swing traders. At least I am. I capture stocks and I hold them for a minimum of 6 to 9 days on average. But over the past couple of weeks, it's been so volatile after hours, right? Like today or yesterday popped up, 2.5%. Today, huge sell off right after hours. The volatility is so high. So you just got to take a step back, focus on what you can do today. You alter your strategy, alter your approach, and that's what's important with trading. So hope you guys all enjoyed today's video. If you did, smash that like button, subscribe. A lot of great opportunity out there. You just got to know, you got to learn. So we'll see you guys in the next one. Hope you guys enjoyed it. And if you guys want to learn more about, trading, check out our school. And the broker we used for today's video and the one that I always use because they're awesome is Moomoo. So I'll put a link to them down below. You guys can get up to 30 free stocks. They're fantastic. So click that link, sign up, and check out our new investing and trading merch. I'll see you guys. Hope you guys enjoyed it. Take care.